Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.24elliottwaves.com for Elliott wave trading, and for general trading, www.stochastic-macd.com. For all trade, we'll use the 5% money management rules and apply stop loss in all trades. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. This is very, very important. The title of this video is how to scalp securities using the wave principle, part 2. How to scalp securities using the wave principle, part 2. In the first part of this video, we were focusing on the market stable data that stated that the price will always move from one support level to a resistance level, or from one support zone to a resistance zone, or from a resistance zone to a support zone. All right? If you have not watched that video, I recommend to traders, to watch the first part of this video and to understand, the market stable data that consists of the price moving from one key level to the next key level, from a support level to a resistance level. In this video, we will be focusing on the first market pattern, the rising channel, how we can scalp, securities such as commodity stock, forex, currencies, ETF indices, all right, using the wave principle. As I explained to you, whichever trading system, whichever trading strategy you are using, whether you are using Elliott wave, theory, you must constantly comply with the market principles, all right? So there are three market patterns: the rising channel, the declining channel, and the horizontal channel, all right? So if I say to traders that there are three things that the price doing all the time, I think they can tell me that these are the rising channel, declining channel, and the horizontal channel. The price can go up, go down, We will see these market patterns. They are not chart patterns, all right? So how do we scalp the market, using the Elliott wave without violating, the market pattern? In this case, the rising market pattern, One of the things I want to draw your attention to, as I explained to you in the first video, we were focusing on the support and the resistance level, and I demonstrated to you that the price, is moving from one key level to the next key level, or it's moving down from one resistance level to a support level. And sometimes we can see clearly that the price will move in 5 moves. I don't want to talk about waves here. In 5 moves, 1, 2, 3, 4, 5, up to the next key level. Or sometimes we see it coming down 1, 2, 3, 4, 5 to a support level. All right. In this video, I want to refer traders to our webpage at www.24elliottwaves.com, and the page that I want to recommend to traders is flat correction. So you go to www.24elliottwaves.com. I want you to spend quality times, studying everything that we have said on that page, the videos, and to learn more about the flat correction. There are different types of flat correction, and I will not go into that detail in this video, because the purpose of this video is about how to scalp securities using the wave principle. All right. So what we see is that the price will go in a rising channel, and then it will come out like this, 1, see, it went down 1, let's see, 2, retest the channel, and then come down 3 like this. You will see that on the 1-minute chart, on the 2-minute chart, the wave patterns are fractal patterns. So you may see it on the yearly chart, you will see it on the daily chart, you see on the 50-minute chart, you see on the hourly chart. I'm on the hourly chart now, because if we want to scalp, we can combine two different time frames, at least two time frames. This is about the top-down trading method, okay? You can scalp using a top-down trading method. So you start from a higher time frame and then bring it down to a lower time frame to scalp. You understand? The trading drill, they set up the signal and a low-risk entry point. This is true also when we are scalping, okay? But we can see the same pattern completely independent on a 3-minute chart, on a 5-minute chart, on a 10-minute chart. But always check the higher time frame, okay? So the price will come out of the channel like this, 1, 2, 3 moves, and then you go back up again in 1, 2, 3 move again, okay? This is not a beautiful pattern, but if you accept that, I want you to get a point. So the point I want you to understand in this pattern is that the price was rising first, and then you come out of the channel, okay? And people think that the downtrend has begun, all right? But the downtrend is not yet starting, okay? People think that it's going to go down more, but it won't go down more. So you go 1, 2, 3 like this. Now, traded that understanding your way, we know that the minimum price move is free, isn't it? So if it's changing direction after 3 moves, we will take it. In fact, if it display a higher low like this after 3 moves down, we will definitely buy that. As an Elliott trader, you should pick on this opportunity. 1, 2, 3 move down, and it display higher low, you will buy. You will buy, okay? If it goes down and rally up 1, 2, 3, okay, and display a lower high, you will sell. Should click, okay? Should click for you. All right, now, so people will think that as the price out of the channel, people will think that, okay, the downtrend has begun, and that's it, okay? But it's not true. But to the surprise of everybody, you will see that the price will sometime go back up. You go back and display a new high. How come a price coming out of the channel and then going back again inside and display a new high? And then the bull will think that, okay, a new bullish cycle has begun, but this is not true. The price will come back down again. This is what we call the flat correction. 1, 2, 3, 1, 2, 3. But the level I want to traders to understand if they want to scalp is this level here. Look at my drawing. I want you to remember this level, the 138% Fibonacci extension zone. If I put it here like this, okay, here, I'm moving it to go into the mind of other traders. If I put it here, if I draw it from here, where my cursor is, all the way up here, because there was a horizontal channel, and from here, all the way here, this is the 138% Fibonacci extension level. Can you see it? 138. If you want to know more about Fibonacci extension, go to www.dayprotraders.com or go to our YouTube channel, Day Pro Traders channel on YouTube, to watch videos about Fibonacci tradings. All right. So this is what you don't want to forget. So the price was in a rising channel, and then the price come out of the rising channel. People are thinking that a downtrend has begun, but quickly the price returned back up into the zone of a 138% Fibonacci extension zone. Even if I move it down here, okay, you see that it's still the same zone almost. We are talking about zone. Here, it didn't touch it. Sometimes, I'm not saying to traders, this is a demonstration. What I'm trying to do here, ladies and gentlemen, I want traders to get a bigger picture, the foundation, okay, have a solid foundation. So this is not a trading signal. This is not a technical analysis. I'm explaining something that is fundamental for traders, and I want them to understand. And though the chart did not meet the 138% zone, I want you to get a picture, okay? Price was in a rising channel, price came out of it, and then went back up into the zone of 138% zone. The best scenario, you will see you come down like this, 1, 2, 3, okay? If you draw it properly, talking about a flat correction, you come down 1, 2, 3, and then you come up again, rally again, Okay, one go up, pull back nicely like this. This is what we call a double retracement, and bring it back to the 138% Fibonacci retracement level. If you forget everything that I've said today, you must remember at least the 138% Fibonacci extension zone. And from that point onward, professional will look for opportunity to sell because they understand the internal wave of the flat correction, 1, 2, 3, 1, 2, 3. But as I explained to you also, I was referring you to our webpage, the flat correction page, that there are different type of flat corrections, all right? So as we see, the price was in a rising channel, price come out of the rising channel 1, 2, 3, and then go back up again 1, 2, 3, and hit the 138% Fibonacci retracement zone. Professional will look for opportunity to sell right here. If the price start going down, or if, okay, from here, they will sell. They will sell. This is excellent opportunity for traders to sell on a 5-minute chart, on a 50-minute chart, on the hourly chart. You will see this pattern. But I want you to follow the trading drill and also to use a top-down trading method. So if you want to sell, for instance, the price here, okay, you see the pattern, 1, 2, 3, 1, 2, 3. You see, yes, that's exactly what I just said, okay? Don't behave like a child, okay? What do you need to do? You want to sell anytime, check whether you are at a resistance level. If it's not a reliable resistance level, you may decide to stay out. Sometimes you will see like this. That's why this is not a science. The price will come to the 138% Fibonacci extension zone, but if there is a better resistance at 161% Fibonacci extension zone, the smart money, remember, will always sell at the best price. Yes or no? So, though you are using this, strategy like a science, so you decided to sell straight away here, but the smart money does not care about that. They want to sell at the best price. So the price may go up first to the best resistance level before it may come down. So, or it may shoot fast, run fast to a key level, to the best resistance level where orders are placed to sell. These orders will be filled and quickly before the price will drop down. This method of trading is valid for scalping, for day trading, and also for swing trading. In this case, you are not violating the market pattern. Though the price was in a rising channel, the price came out of the rising channel in 3 moves. So we know that 3 moves, that's the minimum price move, okay? Not only that, it double retraced this move, 1, 2, 3, 1, 2, 3. You remember today in the first video I said to you, when you see the price doing this kind of movement, okay, same pattern on the left-hand side, same pattern on the right-hand side, as soon as the second portion is completed, we can sell. You remember that? I said in the first video. So it came down 1, 2, 3, and then went back again. Same move, the opposite, okay? Went down. Down, the opposite of down is up. And then it went back up, the opposite of up is down. And then it went down again, the opposite of down, again up. So it did the inverse of this move. If you see that anytime, click it, okay? Click. Let it click in your mind, okay? And be ready, okay? Be ready. But remember, check whether you are at a resistance zone and then look for opportunity to sell. This is excellent pattern for, okay, a scalping. So you will see sometime on a 3-minute chart, on a 1-minute chart, you see very often on a 5-minute chart, the time frame that I would prefer today to use, especially the 15-minute chart, you will see that. Have you watched the video that I call the 4-hour chart day trader? I jot to your channel. Check it. 4-hour chart day trader. I jot to your channel. The relationship between the 4-hour chart and the 50-minute chart. So you will see this pattern very often on a 15-minute chart. 1-5. This is excellent for scalping. You will see also on the 5-minute chart, but very often you will see it on the 50-minute chart. All right, for scalping purposes. You will see also on the 3-minute chart, okay? But sometimes because if you go, look, you see all this data we are seeing. If you go to the 3-minute chart, you may not see all this data, okay? Because of, you see, this is 3-minute chart. That's what we can see on the 3-minute chart. So if you're on a 3-minute chart, you may not see the whole pattern. So, but here on the 50-minute chart, we can see what is happening. All right. I was in fact on the hourly chart. So if it's not clear on one time frame, switch time frame. Okay. Sometimes you see it clearly on a 3-minute chart. Sometimes you see it clearly on a 50-minute chart. This pattern. Prior was in a rising channel. Came out of the rising channel, 1, 2, 3. Okay. And then went back up again, 1, 2, 3. In a zone of 138% Fibonacci retracement level, we will look for opportunity to sell. The opposite also is true. When the price was in a declining channel first, so we see a declining channel, okay? Price will be in a declining channel, and the price will come out of the declining channel in 3 move, okay? So people will be thinking that, the bull will be thinking that, okay, this is the end of the downtrend. But to the surprise of everybody, the price will come back down again in 3 move, doing the opposite of this move up. All right? But not only that, we display a new lower low. People get confused. 1, 2, 3, 1, 2, 3. Display new lower low here. But you remember what I said to you? As soon as we see this thing happening all the time, by repeating the same pattern, the opposite reversing itself nicely like this, think of the flat correction pattern. Verify here. You will verify whether you are at a valid support level. All right. Is there a better support level below? Use the trading drill, the setup, the signal, and low risk. If you see on a 50-minute chart and you are about to enter the trade, you may switch completely to the 1-minute chart to zoom into it. All right. You can see it completely on the 1-minute chart. All right. You will see it completely neat and beautiful, gorgeous on the 3-minute chart also. All right. And there are different types of flat correction, but I will not go into the detail of the flat correction. But I want you to focus on the rising channel and the declining channel when the price is out of the declining channel, and then we continue to display a new higher high or a new higher low after coming out of the channel. It makes sense? It makes sense? It is also powerful, very powerful. For scalping purposes, look for this Elliott wave pattern, the flat correction. But what I want you to understand is the market patterns, okay? I'm going to remove Saline, and I'm going to go a little bit deeper into this. All right? This is about how to scalp security, financial securities, okay, using, okay, the wave principles. We are recording this video because some trader has asked excellent question, and they have also been very patient with us. And now we are recording the video. Okay, this is what we want today to do. Send in a question. This will give us idea to record videos, and we will be posting them on YouTube at appropriate time. We can't overload our YouTube channel every day, so you understand that. Okay, here we are. I don't think I want trader to understand. This is what we're talking about all the time, the multi-talented trading. All right? The multi-talented trading. So when a price is out of a channel, okay, all right, what do we need to do? So price went down below this channel, what do we need to do? A lot of traders that are following us will tell me now, we need to project the channel straight away. The equal size of the channel. That's what we call the market geometry. All right? Equal size. Project it to the direction of the price. You see, if you project this channel, if you accept that this is the equal size, if you accept it, okay, you can see that it's somewhere here, isn't it? Is it too big? All right, let's not cheat, okay? Okay, let's put it. I think this is, if you like, I'll do it fast. I don't like to, as you know me, I like things to be very simple. So, very simple, okay? So this is the width of this channel. So I can do it like this very fast. So it's not too bad, isn't it? We can say equal size, okay? So now it's out of it again. Oh, I need that again. So all right. Okay. So if it's out of it again, we can project it again for the third time. Doesn't matter. This channel projection is very, very powerful. Look at that. Look at this beautiful place. Look at here. Okay, you see how you come and touch it here? Using the projection of a channel. See, look at this one. Beautiful, isn't it? Double bottom on the edge. Have you watched the video that we call how to day trade on the edge? I jot to your channel. On the edge. Gorgeous, beautiful, okay? So, if the price come up from the channel, okay, you see it come 1, 2, 3, keep projecting the channel. You can see here, first one, second time, somewhere here. Yeah, in this case, it has stopped at the median line of the third channel, somewhere, if you accept that, somewhere near the median line of the third channel here. But as I explained to you, always use the trading drill, okay, pay attention to the trading triangle, all right, and use a top-down trading method. You may see this on the 50-minute chart. You can go back to the 1-minute chart to enter the trend. You can see this on the 5-minute chart and then go to the 1-minute chart to enter the trend. You can see this on the 30-minute chart and then go to the 3-minute chart to enter the trend. For scalping purposes, you are looking for how many pips? Some traders say to me, yeah, they are looking for 10 pips. I'm looking minimum 30 pips for day trading, all right? So scalpers, they are looking for small pips, very fast, very fast, very fast. But the scalpers, these are what I call, okay, how should I put this, okay? They are very, very agile. They are very, very agile, and they want to move fast. They like a lot of lower time frame, 1-minute chart, 2-minute chart. For them, 50-minute chart is like a very big time frame. But there are professional scalpers, okay? They don't trade, they don't go to the 50-minute, they don't go to the 1-minute chart, just scalping. This is what a lot of ordinary traders do not understand. They don't go to the 1-minute chart just to scalp. They break it down from a higher time frame, and they don't violate the market pattern. The best scalpers, and they don't just come to the 3-minute chart. But what we have seen recently, with the high-frequency traders coming to the market, building all sorts of crazy algorithms, some of the people that are software developers, they are not traders. So you can imagine, or some people who are asking, can you build a software for us for scalping? Or some people selling some dodgy software to some big institution, creating too much distortion in the market. All right? So, in fact, the high-frequency traders are used as scalpers, okay? Big-time scalpers. But this scalping activity are not done by individual. They are done by the computers, the trading computers. All right? To cut a long story short, for this exercise, we don't want to, okay, stray away from our topic, how to scalp security using the wave principle. In this case, we are focusing the market stable data, the rising channel, and also the declining channel, using, okay, the flat correction, the flat Elliott wave patterns. The internal wave or the flat Elliott wave, the Elliott wave flat correction is 1, 2, 3, 1, 2, 3, 1, 2, 3, okay? And then the price will come back down, 1, 2, 3, 4, 5, very fast. This is the beauty of this, okay, a scalping method. Using the flat correction for scalping purposes is a powerful scalping trading strategies. Because if the price come to the 138%, it's going to come down. It will come down like this, 1, 2, 3, 4, 5. Very fast. Why the price will go fast? You have to understand that the price will go down fast. Why? Think of it for a second. I'll let you think of it for a second. All right? If you have watched all the video regarding the flat correction, you should know that. Why? Because the reason is, when the price was here and came out of the channel, people thought that the downtrend has ended, the uptrend has ended, okay? They thought that the uptrend has ended. But then, it started going up again and display a new high. So the bulls place orders here above the previous high here to buy. So a lot of bulls are here. They are happy that this is not a proper downtrend, and they are rejoicing. To their surprise, the price coming down again, and they had to liquidate their position very, very fast. They had to close their trade. They had to reduce their loss. They have to cut their losses very fast. This is what we call a capitulation. So the bulls have to close their position. As they have to close their position, they have to sell. And that's the bear that are waiting to sell at 138% Fibonacci retracement level, Fibonacci extension level. The bear are selling, and the bull are capitulating. They are forced. When traders are forced to close their position, the price run fast. They are desperate. They are running through the same door. They stampede. Boom, 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 boom. You see it come down 1, 2, 3, 4, 5 down. But this is a corrective wave pattern. 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. As I explained to you, this video, don't go and sell Caterpillar because I'm using Caterpillar here, Caterpillar stock, as the market open on Monday. Be careful. This is for, okay? As I explained to you, I want you to get a picture. A rising channel, price come down, people think that the price is going down, price going back into display, a new high, reaching a level of 138% Fibonacci retracement level. For a scalper, on the 1 minute chart, you see that, you are looking for opportunity to sell. If the price was going down before, and then rally up 1, 2, 3, and come back down 1, 2, 3, display a new lower low, and then start going back up, you will look for opportunity to buy. Now remember, I don't want you to start scalp like a crazy scalper. That's what I'm trying to understand. Anytime you are buying, why do you need to check? All right? It's like you want to jump up. All right? You want to have a firm surface, a solid surface, okay? A launching pad where you can jump from. You don't just jump, okay, from any place, okay? If where you are jumping from is not solid, it's not going to go anywhere. It will crash. The same thing when we want to buy, anytime we want to buy, you look, suppose I want to buy on the hourly chart here. The next thing I want to check whether it's a solid, okay? Let's do this exercise here so you get a picture. Suppose I want to buy here, okay? At this point in time. After I did my projection of my channel, you see, the median, the price was hitting here, you see? Right here, did you see here, okay? So now, let's draw a line there. Suppose I was there and I want to buy, okay? So, that's the red line here. I may go, for instance, to the 4. If I'm a lazy trader, I may go to the 4 hour chart and see. How is it support level? Yeah, it's a support level. See here? Hit it here, and pull back. It's not bad. And then I see also the price consolidate here. Wherever you see a consolidation, the price acknowledging a key level, either a value zone or a key level. All right? Because when a smart money is about to buy, the price will slow down. When a smart money want to sell, also the price will slow down a bit before they will sell. All right? So, okay, I'm satisfied. And then I will go now to, okay, for instance, 3-minute chart to zoom into that red line I can see now on my chart here and have a perfect entry point. For a day trader or a scalper, the entry price is the most important thing. It's like for a pilot is going to take off or land. That's a critical moment. The same thing you want to enter the trade is a critical time. Okay, you need to do it properly, like a professional. Okay, a pilot landing or taking off. Okay, you want to do it perfectly. Okay. Let's go back again to the hourly chart. We were talking about how to scalp the market on the 1-minute chart. This strategy, I want you to get a bigger picture so you can replicate this strategy on any time frame like professional traders. The rising market pattern, the declining market pattern, price coming out. But the point I want you to understand, I want you to have the 1, 2, 3, 1, 2, 3, and then here, this is what I want you to remember. The most experienced traders can trade the whole pattern, which means if you come already and did this, some traders can sell again. They sell here, buy here, sell it down, and buy again. And then sell again here and leave it go down 1, 2, 3, 4, 5. And as it's coming down, they will keep selling. So one position here, they will load one position here, another position here, and they will keep selling it down. That's what they call milking the market. Milk it here, they will milk it here, and they will milk it here down because they know what is likely to take place. But you don't get too excited, all right? Every trade, okay, has some element of risk. So if you are a new trader, you can be very excited, okay? You are very enthusiastic. You see, boom, I'm going to do it. And then suddenly things work against you. Or maybe you violate the trading triangle, or you trade against, okay, the market leaders, and you get into trouble. Don't get like that. The best approach, use a demo. I have some traders that are using a demo account for months, for weeks, which is great. They're using it, and then they will try with real money. They feel confident and they try with real money. If they fail, go back to the blackboard. You are working on your ability to train, okay, and building your skills, your knowledge, okay, to do it. So you have learned something to them. Don't go and just go very wild with it like a gambler, but go, okay, steadily. Test it, all right? Try it many times until, okay, you master it and you are confident, and then go steadily, okay? Go steadily, all right? I will not dwell on this too long because I want this video to be short. I don't want them to be too long. And I will be recording, okay, the third part of this video, how to scalp security using the wave principle, part 3. I'll be talking to you now 30 minutes. To summarize the video, we are looking for the flat correction pattern. 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. We want to sell at the top and bring it down until it displays the 5 wave down. Remember, there are some correction patterns that are complex patterns. So you may see 1, 2, 3, 1, 2, 3, and then you sell it here. And you may not display 5 wave down. So you go 1, 2, 3, and again, go back up again, 1, 2, 3. And you may say, George, it didn't display 5 here. This is something else. All right? This is another pattern. 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. All right? So, steadily. I hope you have learned something for this video also, okay? And then we put into use, okay, to make excellent decision. The market pattern and the flat correction pattern, okay? Looking for opportunity to sell, okay, at the top, or looking for opportunity to buy at the bottom. As always, we must follow the trading drill, okay, and use the top-down trading method. This is about, okay, how to scalp securities using the wave principle, part 2. See you in the third video. Speak to you soon. We are the TSTW 24 traders. If you like this video, okay, give us the thumbs up. If you dislike it, we want to know. Put the thumbs down. We will know who disliked the video, so don't be afraid to put it down. If you are a friend of mine, I will know whether it's you who put the thumbs down. So we want to know. Put it down. We don't know who gives us the thumbs up, thumbs down. We don't know. Okay, I don't want to know. All right, just do it. Have any comment, put it below, and this will help us to improve, okay, our videos. Until the next time, enjoy yourself and be very happy. Thank you for watching.